If you were born before 1959, there may be Social Security money you have not claimed. But before you believe that the government automatically owes every senior $24,900, you need to hear the truth. There is no universal SAW payment with that exact amount. No secret check is waiting for everyone born before a certain year. Yet some retirees really are missing thousands of dollars because of an incomplete claim, a wrong earnings record, an overlooked survivor benefit, or a decision they never challenged. And the most important part is this: Social Security usually will not search every possible path and choose the most valuable one for you. The agency processes the claim and information in front of it. If something is missing, outdated, or never requested, the money may stay unclaimed. So where did the $24,900 number come from? It can describe a possible total in a personal example, but it is not a standard benefit. One person might be owed a few $100s, another might receive several thousand. A smaller group could be owed much more. Your result depends on your work history, family situation, filing date, benefit type, and whether an error actually happened. The first place to look is your earnings record. Social Security calculates retirement benefits using your highest 35 years of covered earnings, a missing year, an employer reporting error, or wages placed under the wrong Social Security number can reduce the benefit used in the calculation. For a person with fewer than 35 years of earnings, each missing year can be especially damaging because Social Security may count as zero. Open your personal My Social Security account and compare the earnings history with old W-2 forms, tax returns, pay records, or other proof. Do not focus only on last year. Look for a year that is blank, unusually low, or clearly different from what you remember earning. If the record is wrong, contact Social Security and ask how to correct it. You may need to provide documents proving the wages. This is not an instant bonus, and a correction does not guarantee a huge increase. But if the missing earnings belong among your 35 highest years, the correction can raise your monthly payment. A monthly increase can also create past due benefits, depending on the facts and the rules that apply. That is the first hidden door. The second can be even more valuable because it does not depend only on your own work record. Many widows, widowers, divorced spouses, and surviving divorced spouses do not fully understand survivor benefits. A person may assume that because they already receive retirement benefits, there is nothing else to check. But Social Security can compare benefits available on different records. A surviving spouse may qualify for a higher survivor payment. A divorced person may qualify based on a former spouse's record if the marriage and other eligibility rules are met. This does not normally mean you receive 2 full checks added together. Social Security generally pays your own benefit first and then may add enough from the other eligible benefit to bring the total to the higher amount. Still, the difference can be meaningful. Imagine someone receives $1,500 a month on their own record but could qualify for a survivor amount of $2,100. That $600 monthly difference is not a $24,900 universal check, but over time, it becomes serious money. The problem is that family changes, old marriages, and incomplete records can make these cases easy to miss. Ask Social Security a direct question. Am I eligible for a higher retirement, spouse, divorced spouse, or survivor benefit on any record? Do not give your Social Security number to someone who calls unexpectedly. Contact SAW through its official website, your secure account, a local office, or the official phone number. But there is another group that saw real retroactive payments, and this may be one reason dramatic dollar claims began spreading online. The Social Security Fairness Act repealed the windfall elimination provision and government pension offset. Those old rules reduced Social Security benefits for many teachers, police officers, firefighters, and other public workers who also received pensions from employment that did not pay Social Security tax. After the law changed, the SAW adjusted millions of records and issued retroactive payments to eligible people, but that did not create the same payment for everyone born before 1959. Eligibility was connected to the old WEP and GPO rules, not simply age. Payment amounts differed because work records, pensions, spouse benefits, and survivor benefits differed. If you had a pension from federal, state, local, or foreign work that was not covered by Social Security, check whether the new law affected you. Many cases were adjusted automatically, but complex cases and people who never filed for a benefit may still need attention. The key words are may be eligible, not everyone is owed. Now we reach the mistake that can quietly close the door on past money, waiting too long to apply. If you are past full retirement age and have not started retirement benefits, Social Security may allow retroactive retirement benefits, but generally not for more than 6 months and not for a month before full retirement age. Taking retroactive months can also reduce the delayed retirement credits you keep. That trade-off matters. Suppose someone delayed benefits and then asks for 6 months of retroactive payments. They may receive a lump sum, but their future monthly benefit may be lower than it would have been if they chose a later starting month. The lump sum is not free money. It can exchange part of a higher lifetime monthly payment for cash now. Before choosing retroactive benefits, ask SSA to show both estimates, the lump sum and future monthly amount with retroactivity, and the monthly amount without it. Then compare the break-even point, health needs, cash needs, taxes, and possible survivor impact. A married higher earner should be especially careful because delaying can sometimes support a larger survivor benefit later. There is also a path for people who disagree with an SSA decision. When Social Security makes a decision, it sends a notice explaining the result and appeal rights. If the agency used the wrong earnings, marriage information, filing date, overpayment amount, or benefit category, you may be able to request reconsideration. Form SSA 561 is used for many non-medical reconsideration requests when a person does not agree with a decision. The deadline shown on the notice matters. Do not place an SSA letter in a drawer because the language looks complicated. Read the decision date, the amount, the reason, and the appeal instructions. If you need help, contact SSA, a qualified attorney, or a reputable nonprofit benefits counselor. Keep copies of every document and write down the date, time, and name of anyone you speak with. An appeal is not a trick for creating a benefit you never earned. It is a process for correcting a decision that may be wrong. The strongest appeal explains the exact error and includes proof. I need more money is not enough. My 2018 wages are missing, and here are my W-2 and tax records gives the agency something it can verify. Now let us talk about the biggest trap surrounding claims like this. Scammers know that seniors are interested in benefit increases and back pay. They may promise a guaranteed check, charge a filing fee, ask for banking information, or claim your money disappears tonight. They may use logos, fake case numbers, and official-sounding language. Social Security does not require gift cards, cryptocurrency, cash, or a wire transfer to release benefits. Do not click a random link in a message. Do not pay a stranger to unlock a secret government account. And never give an unexpected caller the one-time security code used to enter your online account. Here is the safe 5-step review. First, sign in to your official Social Security account and save your current benefit information and earnings record. Second, compare the earnings history with your own documents and mark any suspicious year. Third, list every marriage, divorce, death of a spouse or former spouse, pension from non-covered work, and previous Social Security application. These facts can change which questions you should ask. Fourth, call or visit Social Security and request a benefit review. Ask about your own retirement benefit, spouse or divorced spouse benefits, survivor benefits, the Fairness Act if you had a non-covered pension, missing earnings, and any decision you may still appeal. Fifth, request written estimates before choosing retroactive benefits or changing a starting date. Never make a lifetime decision based only on a viral dollar amount. The real revelation is not that every person born before 1959 is owed exactly $24,900. That claim is false. The revelation is that several different Social Security rules can produce overlooked money, and many people never ask the questions that reveal it. Your birth year tells us you are at or beyond the age when these issues deserve an immediate review. It does not determine one automatic payout. The valuable action is not filling out a mysterious secret form. It is checking the record, identifying the correct benefit category, challenging real errors on time, and choosing retroactive payments carefully. If your record is correct and you already received the highest benefit available, no hidden check may exist. That is still useful to know. But if wages are missing, a survivor benefit was overlooked, a pension reduction should have been removed, or a decision was wrong, one careful review could change your monthly income and possibly recover past due money. Share this with someone born before 1959, but share the truth with it. There is no guaranteed $24,900 payment. There is, however, a checklist that every older American should complete. Subscribe for clear benefit updates without fake promises, and keep every decision tied to official SSA information and your own records.